Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Smart Direct Club, ticker SDC. Reason for this is it has been selling off quite heavily recently, but was up around 6% today, so may have caught some of your guys' eyes. So for this, I just want to start off with, you won't be able to do much standard deviation analysis. Reason for this, as it has been in such a strong downtrend recently, the deviations are just so far apart. I mean, it's at 86 cents and $1.42, and the likelihood of it coming down there, especially anytime soon, is very low. So we're not really going to be able to use any deviations, and we'll have to go off more gap fills and psychological levels for our analysis on this. So the first thing that stands out on the SDC is the gap fill at 523 or around 520. Reason for this is this same pattern has happened 2 times just in the last year alone. As you can see here, it sold off, pulled back, filled our gap before selling off further. The exact same thing happened here, filled the gap before selling off further. And as patterns tend to repeat themselves, we would expect the same thing here. As you see, it gaps down, continues to sell off for a while, continues to sell off, and now we would expect to see this kind of reversal, come back, fill this gap at 523, and from then could continue further down or may finally break into an uptrend. That's not really what we'll be looking at. More from a trade standpoint, now is considered a kind of a lower risk long now. We come into the $3 psychological resistance. We've also come into the 275 psychological resistance. So I mean, we could push down to the 250 psychological resistance, but if the market's going to start continuing up from here, then we would expect SDC to do the same. But if the market does decide to sell off a bit further now, then we wouldn't be surprising to see SDC push down to that 250 psychological resistance. But if you're looking for confirmation, you will have your own way of confirming if a stock's now likely to push up. But really our main target to the upside is we'll probably lock in some around 440. Reason for that is that's kind of the highest of the pre-gap movement, after gap movement. So you may see some hesitation coming into this level, but we will be looking for that further break to around 520, where we'd be looking to be out of the position completely, because it wouldn't be unlikely to come into this 528 level and sell off. The reason I say that is that's usually what you see when you have gap fills, and that's what we've seen the 2 previous times that it's had these gap fills. So really all we're looking for is the pattern repeat itself, push back up probably around here. Wouldn't be surprised if this is now the bottom, pushes up, breaks this 440 level and fills a gap at 525, and then we will probably stop looking at SDC for a while until we start coming to some deviation. For example, at 577 it will be considered a low risk short area, and looking at the deviations going upwards, again all considered low risk shorts if we were looking to get short. And if for any reason SDC sells off quite heavily down to the 141 or the 86 cents, those are all considered low risk long. So if you were looking to get long, those are also levels you could be looking to do it. So I hope you enjoyed the analysis on SDC. I hope that gives you some insight into the stock, and hope to see you in the next one. That's it. Peace.